Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment workshops, our entry-level introduction into life insurance, and all this week, our introduction into whole life insurance or participating whole life insurance. And of course, we're walking through all the ideas of whole life applications and especially dividends. But before we get there, let's do a little housekeeping. You should be going through and have downloaded already the Lincoln Benefit Life software, which we're using for our tutorial. We use it 90% of the time of all our products because it's really a good illustration system for new beginners, and it has great tutorial inserts in the software itself, and I think your learning experience will be pretty good. If you want to go ahead and go out there and download it so you can go page by page with us, just go out to www.lblsales.com/ETW. As soon as you come on the site, you'll see Eclipse illustration software, hit run installer, and you're done. Then Allstate and Lincoln Benefit is a subsidiary of Allstate, they have a great menu of helps, prospecting tools that are just really great. You can see the URL at the bottom of the screen, or the URL, since it's so long, is also in our search engine optimization description attached to this video, and you can just go ahead and copy, paste, and put it in your browser, and it's ready to go. Now you'll notice that my favorite, I've been saying it for months now, I love Facts of Your Life booklet. It's a complete data collection. You can harvest client assets, all kinds of ideas, beneficiary information, and things that I never even thought of before, all either in book form or email attachment. And if you want that, it's absolutely free. Just go out to their site, download it, or order the book, as well as they have great prospecting letters and prospecting postcards. If you're looking for first contact pieces, these are excellent. And just remember, Allstate's already approved this from their compliance department, but if you're FINRA licensed or a registered rep, you need to have your compliance department and your broker-dealer sign off on this and make sure that they're okay with it. And if you're with an insurance agency that has certain compliance protocols, just remember, you need to go to them and get that checked out first. But excellent tools, and if you don't know what you're doing, this has already been written for you. And then if you say, Steve, I saw one of these shows out on the web, but I don't know where I can get all these shows and watch them in sequence in chronology. Well, just head out to our site at www.brokersalliance.com. As soon as you come to our homepage, just click on our on-demand video, big red button, click on it, and all our Edutrainment videos are out there, including also our business insurance zone, our daily internet talk show, and my weekend show called Welcome to the Weekend with Steve Savant. We're also giving away our life insurance manual and the vocabulary that goes with it. You can write me absolutely free. We'll give it to you. thebiz@brokersalliance.com. That's the biz, THEBIZ at brokersalliance.com. And if you see any of the things that we have today, we'll just send it to you, like that thing we used Monday, really good doc on whole life insurance, that document, we'll send it to you absolutely free. Well, let's just go to the board here for a moment. And yesterday, and hopefully if you saw the show, because you shouldn't be watching this show if you didn't see yesterday's show, and yesterday we were talking about dividends, and we were looking at all the uses that we can. Now remember, what's the big caveat with dividends? Dividends are not the same as in stocks. Dividends are a return of unused premium. Unused premium. So keep that in mind. And so when I take a dividend, in the old days, this is going to be so, it's unfathomable today for young people to see this, but in the old days, think about this. Our dividends, our death benefit could be here. Our accumulating cash values could be here. And if you chose the dividend called accumulation dividend for money, right, for cash, everything above the death benefit line, any cash above that line, was going to be taxable ordinary income tax exposure. Ordinary income tax. Think about that. I mean, wow, that blows my mind. Back in the day in the mid-'80s, we could have elected accumulation. Now we don't do that anymore because the law changed and we had to kind of now move into what we looked into what's called the DEFRA code, and I talked about this in the earlier classes a couple months back. So that's the old way of doing it. You could have taken accumulation dividends, but when the dividends exceeded the death benefit, then you had to pay the tax above the line. That's the basic truth. Everybody's a little different, but basically that's how it went. Now, the first thing you could do with a dividend is take it in cash. And some people used to do it all the time. When interest rates were really high, this was really good because you could have your life insurance and have a kind of a bond-like alternative investment, and you were taking cash, and as long as it did not exceed basis, that thing was tax-free. So now all of a sudden, you're looking at this not only as a kind of a bond alternative, this used to be almost a municipal bond alternative. So if your cash comes out, and as long as it doesn't exceed basis on your dividend, that is going to be free. When it crosses over the line and you start to take constructive receipt on it, you'll want to do policy loans so you don't have to pay taxes at all. But you could take your dividends up through basis and take it out tax-free if you wanted to. Another thing that we do with dividends is I like to use paid up additions, and a paid up additions is extra death benefit. And it also will apply to your cash values. So if I put dividends and paid up additions, you'll notice that there's a small incremental increase in death benefit and cash value, proviso that they actually pay dividends and that their dividends are pretty decent, where they're actually able to buy more paid up additions in death benefit and increase their non-guaranteed cash value column. A lot of people use paid up additions, and it doesn't matter if they're doing it for the whole life or the life of the contract, which could be all the way out to 120, or even what I call time certain limited pay, where you could have 10 pay, 20 pay, and 65 that are not predicated on dividends to vanish that early, but they're actually being used to buy a little bit more insurance and to keep the corridor ahead of your accumulating cash values so you don't have that crossover like we did back in the 80s. So that is used paid up additions. People like to try to come into the entry level with whole life, use a term rider. And I could actually use my dividends now to buy a term rider, and over the life of the contract, I could even use the dividends, not only to buy a term rider, I could start converting this term to permanent. So when you're looking at this, you say, wow, that's a pretty good deal. If I want to get a low entry level premium, I could use a term rider, and then over the time, as dividends perform, if they do or not, we don't know. Again, remember, they're not guaranteed. I could go ahead and pay my 1 year, but I have some extra. I might want to go ahead and convert that. I also might want to do something, waiver of premium. Now, we talked about this last week on riders. And riders aren't, a lot of these riders, especially waiver, isn't free. If somehow you could make this payment the whole life, not the cost of insurance, but the whole premium, that waiver premium would come on. It's a great rider, but I'd like to pay for it. I could use my dividends to pay for this rider as well. I could say, hey, I'm hoping that the dividend performance will be great enough where that expense of that income, my waiver of premium, if I became disabled, I'd like that. That's a good living benefit, and I'm hoping my dividends can perform at that level. You could also reduce your premium. So every year, let's say your premium was $1,000 and the actual payout was about, let's say, $50. It was your dividend. You would have to pay $950. So your actual premium price would actually go down. So all of a sudden, you're reducing your premium every year. Somewhere out there, maybe 15th to 18th year, that actual dividend may have dropped your premium where now you no longer need to pay that premium at all, and it would switch back to paid up additions. So it would start rolling up just like it did up here. So what you want to do is look at the basic ideas of using dividends and using this as a real structural way to kind of manage your contract, manage your policy, and use it. And remember, the companies that are really doing a good job on dividend payouts have a great history to look at. And if they have a great history to look at, then you can be confident that they're going to do their best shot. Remember, it's still not guaranteed, but if you see a good history behind it, then I know I can play with this. Now, I want to kind of go out for a little second here and talk a small thing about dividends in income scenarios. So many people like to use participating whole life for income. And I alluded to this yesterday or the day before, I can't remember, where I said, I noticed that indexing UL can use a 20 or 30-year look back. Let's just use 20 for right now. And I could go ahead and look at the actual dividend history, which we're going to try to look at some of this tomorrow. We're going to look at the dividend history of a couple carriers. And is the dividend history of actual paid dividends. Is the actual paid dividends greater than IUL 20-year lookbacks? And I got to tell you, I was surprised. Because when you look at it, remember, those were high interest rate environments there back in the day. So if I was going to be fair, and I showed the 20-year history look back of IUL with the S&P Index Universal Life, and I was comparing it to the actual dividend paid by some of the top carriers. And remember, there's a lot of carriers in the whole life market, but there's really only, for our purposes, and really, I'd hate to say the top 10, and after that, it's kind of pretty much not really worth looking at. The top 10 carriers that actually pay decent, have good history, when you look at their actually paid dividends, they actually exceed the 20-year look back on the S&P. So I just want you to be aware, when you look at 20-year tranches or all the way back to the beginning, back in the early 1920s, I just want you to give a fair comparison here and say, if I was going to use a look back number, what look back number should I use? Now, in the dividend paying contracts, I won't be able to illustrate that. I won't be able to say, hey, here's my current illustration, but hey, if I used a 20-year look back, here's what it would look like. I know interest rates have changed. I know the whole paradigm has changed on how we credit because of the low interest rate environment. But if I'm going to be fair, if I was going to look at it, I'd have to say I have to give whole life their historical due versus my 20-year or 30-year look back historical view with Index Universal Life. So I think I'm just being kind of fair. When I'm looking at this for income, this is why I'm bringing this up. When I'm looking for income, I'm either going to use withdrawals to basis, or I'm going to use policy loans. In whole life, this is a big deal because there is no such thing as we have an indexed universal life. There's no such thing as arbitrage loans or participating loans in that regard. And here's where we're mixing some nomenclature that I think is really rough, and we always have to make this distinction. Many indexed universal life is using the phrase participating loans, but we've been using the word participating in dividend history for 50 to 60 years. And so sometimes the consumer is mixed up because he hears the word participating and he doesn't know, is the IUL a dividend paying? Is the whole life a contract that's using some kind of a participation? So it mixes it up. Arbitrage loans is a little higher in MBA language, but it really doesn't do the job either. So it's very confusing to the consumer, and I wish we could come up with a new way of expressing this because it's kind of mixing some ideas. Income with whole life, though, withdrawals to basis and policy loans to gain. Now, the only issue that you have to deal with is what kind of loans. As I said earlier in the week, I've never seen a zero net cost loan contractually guaranteed in a contract. So when I'm looking at whole life policy loans, I'm either going to have what some call a wash loan, which again, I suspect on the language, and then that's generally current company practice. It's not really in the contract, although there might be a few out there, but I know of none. But most of them use spread loans. And that can be anywhere between 200 and 300 basis points charge. And some use, there's only a few left, use direct recognition loans, which actually can lower your dividend credited. And you have to remember to have them do an in-force ledger. Anytime you want to see that, and you're dealing with a couple carriers that use direct recognition loans, you have to write in your brief and in your request that you want the in-force ledger to reflect direct recognition loans all the way up to the time and through distribution so that you can see the impact, because it is somewhat punitive from a consumer point of view. Great for the carrier, but the consumer, different story.
This has been an Edutrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.